I'm Justin Rowe-Roberts of BizNews, and with me for today's investment insights is Sasfin Securities' David Shapiro. The front page of Business Day reads, BNP Paribas expects rand at 14 Rand 25 to the dollar by year end on healthy current account. The currency markets are notoriously hard to predict, especially short-term movements. I know offshore equities have been your preferred investment destination of choice. Is that specifically company or growth related, or have you also taken a stance on the rand weakening?
No, I never take a stance on the currency. It's just impossible to try and read it. So, Justin, when I choose companies, I look at the underlying businesses, where they're going to be in 5 years, and there's so much excitement at the moment. But to try and read where the currency is going to trade is impossible. I'm not going to doubt the 14.25 because it can happen with great speed. If it does happen, believe me, it's going to be good for the equities we're buying. It means that that people are no longer that the inflation worries and all the other concerns that are unsettling markets. I don't want to see almost disturbing markets at the moment will have vanished and people are buying equities again. That's what will drive the rand down to about 14.25. I think it's much more dollar related, much more global markets related than perhaps the current account deficit or any local specific news.
What's the biggest threat or risk to markets in your opinion at the moment? I heard you mention inflation now, and many analysts are talking about that. The oil price going above $80 a barrel. Ominous signs?
Short term. Short term, we don't know. Justin, we're coming out of this pandemic, and I think if we look at Friday's numbers, the jobs report, I always look. I haven't got anybody behind me. I haven't got a great research team in front of me. One has to make your own opinions on your own readings. Yes, you get a few opinions from friends or other people, co-workers and that. But I mean, on Friday, the view in the United States was that the jobs they're going to be 500,000 new jobs created. We come out with 190. And you say, hold on a sec. What went wrong? These are professionals. These are chaps who understand it a lot better than I do. But what I'm trying to identify is just how difficult it is to read the market at the moment. We kind of know where we're heading, but I mean, the distortions that are being caused are going to take some time to filter their way through. So I'm not. I'm watching the risks. I'm watching the oil price because I think that was one distortion that we never expected to happen. We always thought there was a glut of oil around, and certainly in gas. I mean, no one ever thought that gas prices would be where they are. They're actually leading oil prices. It's always been the other way around. So I think we've got to keep a keen eye on that and whether that could derail the recovery that we're seeing. The recovery is slowing down as expected for various reasons. Is that everybody's spending their savings that they made in 2020, and eventually they'll exhaust that. But I mean, those are some of the areas that we have to watch very carefully. So yeah. But I'm not put out. I think the markets are holding up well.
How do you position yourself from an investment perspective in an inflationary environment?
You've got to look for companies that are going to be able to, when I say beat it, in other words, are going to be able to increase productivity, increase the top line, and be able to to combat inflation. And I think a lot of the inflation that we're seeing, I think a lot of it is kind of short term. It's oil prices, import prices. When I say import prices, shipping prices and that, which I think will kind of settle down in a few months. But I mean, in the meantime, it is disturbing the equilibrium, and it could impact on some profitability. But you have to look for strong companies, powerful companies that are able to pass on some of the increases, or alternatively, if they're not passing on that, they have a loyal customer base that is not going to be affected in the short term. So there's no easy answer. Let me put it that way. You've got to do your research. You've got to understand the businesses and say, can we negotiate? Can we get through this period? Are these companies strong enough to get through where we are at the moment?
Bounce back last week. Some precious producers such as Northern Platinum up as much as 30% for the whole week. Besides the underlying commodity prices increasing, is there anything more to the sharp reversal?
Well, I don't know. You explain that to me. I just sit here in wonderment. And I saw on Thursday, Friday, there was a huge gain. In fact, if we look today, palladium prices, which had fallen well below $2,000 an ounce, are now back. The last I looked was 2,150. So there's been a huge turnaround of platinum price. I think a lot has to do with China as well. I think palladium and platinum prices were taken down by the drop that we saw in motor manufacturing because of the chip shortage. That could be alleviated. We don't know the full dynamics. In those commodity trading is notoriously fickle, so you have to be very careful. But I also think that some of the noises coming out of China at the moment are much more conciliatory, easing. We've seen also the bounce back in Alibaba, in Tencent, in Pinduoduo, in Meituan, all these Chinese companies that were hit hard by the crackdown of the Chinese authorities. They starting to come back, and I think perhaps there's a little bit of easing on the Chinese authorities' part that is giving markets comfort. We've seen iron ore price come back from 90 to 120. Also 25% increase. So yes, it was at 220, went down to 90, and is picking up. But it's in the right direction. I'm much more comfortable now that it's found a base and is picking up from these levels.
How liquid is the commodities futures market, David? We see these huge bounces in prices. They're like yo-yos. You would assume it is relatively illiquid given these sharp changes in price.
No, they're massive. No, they're huge, and they have always been huge. Remember, that's where it was always in the commodity market that futures started. Financial futures is something new. Right from biblical times, there was always some middle person, who was buying the wheat crop and selling it on. So they've always been dynamic markets. So that's where Chicago started in those companies, and it's a very vibrant, active market, and for outsiders, extremely dangerous. Just do not tamper with them. Do not think you can read them. It's a very difficult market and highly professional.
It's risky enough buying the commodity counters themselves. David, onto the JSE, two small caps, Solaris and CSG Holdings, announced their intentions to be bought out and delisted from the JSE earlier this morning. This trend is continuing unabated. If you were Leila Fourie, what would you do as the investment horizon on the local bourse is getting markedly smaller by the month?
Yeah, she's picked this up. It's not. It's very difficult for her. You know what I mean? It's these are tiny companies, and I'm quite sad about it because I think there's good value in some of the smaller companies. Justin, I think you have to understand the trend. The trend towards passive has also been responsible for it because you have these armies of financial advisors going out there, and they always play it safe by hugging the index. So no one ever moves out of the comfort zone of the large caps or the indices. So a number of really good small businesses are just ignored. And the danger is that they're being picked up by private equity, and that's becoming where the action's going to be. We all the time, I identify, I try to go through all the results, and I identify some really good small operations that are great for individual investors, people who are running their own portfolios. But it's a global trend, but I find it sad from a JSE point of view. How does Leila handle it? Well, we've tried to get competitions going and bringing people onto forums where they can discuss some of these small companies and try to get some activity around that. Just have a look at people like Piet Viljoen, who are making a huge fortunes and doing very well. Their performance is great by identifying some of these smaller businesses.
Is a delisting route, as you've seen in the last few years, indicative of a cheap market? And on the contrary, is the IPO boom in the US and other parts of the world signs that offshore equities might be expensive?
No, those are dynamic markets, and you have to look. What are the IPOs? They're mainly tech driven, and that's where we're missing out. We're not a tech market. hold on a second, we're not alone. Go to the UK, you've got exactly the same kind of thing. Find me a tech company in the UK. You know, what is the UK market? And we're talking about the FTSE. So there's nothing there it's mainly financials, one or two pharmaceutical companies, and to a large extent energy companies, which is old economy. Australia, to a large extent. So there are a number of markets that have not modernized. Which are the modern markets? Are the US and Asia. Funny enough, in Amsterdam as well, you're starting to get some good tech players. So I think this is a sign of where growth is going, you know, where equity growth is going, where economic growth is going. So we've got to build a tech hub. You know, we've got to find those businesses again and start to build up IPOs in that kind of region. That's where we're missing. So it's not Layla's fault. It's really economic conditions here.